All right, we are live. What's going on, family? How are you doing? How are you doing? Let me make sure everything is clear here. You can still hear me. I want to make sure everything is good. No interruptions. All righty. There we go. There we go. There we go. All right. Hopefully everyone's doing absolutely beautiful. This is live right now. Yes, it is. It is. It is. It is. It is. I did hear you. Awesome. 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 Welcome, Thomas. How are you? How are you? Perfect, perfect, perfect. So, Thomas, if this is your first time on here, or if you've been on here before, if you watch my videos, that is amazing. I appreciate you for taking out of your time of the day on a Sunday to come and hang out. We typically have roughly about an hour or so together. If you do have to, pop off or pop back in, you can always, come back and rewatch it if you'd like. But I do tell people to come on live simply because there's a lot of questions that folks have when they watch YouTube videos, right? And sometimes your questions don't get answered. And some people learn better when it's live. Hey, show me, how you got to this answer with no edits, no nothing, just as live. So show me on the charts why you think this is a buy here, right? Awesome. Appreciate you, Thomas. Or show me like, hey, I'm a beginner. How do you trade options? I want to learn how to trade. I want to learn how to invest or whatever it might be. And I can help you throughout this live on that. So Thomas, let me know down below kind of what level you're at. And I would love to support you throughout this live. I always like to make anyone that's their first time feel welcome. And as you can see, I am calling people by their name. You're not just a number here. So if you're a beginner or, hey, I've traded a little bit of options or, hey, I only, invest, I have a Robinhood account, I don't really know what to do, or, hey, I'm seasoned, Brian, I just come on here to hear technical analysis, like whatever level you are, give me some context and I'll read it as we go throughout this live. Okay. Appreciate you. And we'll get 2 more minutes. So feeling a little bit under the weather. I don't know what's going on here. Personally, I don't get sick very often, but my head started throbbing a little bit yesterday, and um, yeah, just got a little chest congestion. So took some time to rest today. But I said I wasn't going to miss this. So if you see me speeding through it just a little bit, just know that I'm not feeling the best, but it doesn't prevent me from showing up. I can still talk. Now, if I was just raspy and it's hard to listen to me, then there's a difference, right? So, yeah, just letting y'all know that context. I will be for my Leverage University members, and for those that are here on live or rewatching. If you're like, what is Leverage University? That is our kind of community. That is our Discord platform where after this, on Monday through Friday, I'm live trading. I'm giving trade ideas. I'll show a little bit of the back end here as we share our screen in just a moment as people trickle in. But if you did want to learn more and you've binge watched all the YouTube videos and you're like, man, I wish I could ask this dude questions, right? That is your next step, is to jump into our Leverage University Discord. All right. In regards to options, I haven't even seen a chart. I've been paper trading daily on Webull, doing okay, skimming some strategies from the web. Awesome. Awesome, Thomas. So that gives me context. I'll definitely answer that question. I think any question that someone asks, it benefits everybody. You remember when we were adolescent children and we are like, man, I wish someone would ask this question because I don't want to ask it. I don't want to look stupid or whatever. Now we're grown adults and people are like, man, that's a good question. Like, what is paper trading? Like you just start going down this rabbit hole of other people asking the same question. They start building on it. So I'm a big advocate of asking questions. It could be the simplest one. It could be one like, hey, I know it, but I'd like to hear your version of it. Right. I appreciate you. I appreciate you. All right, let's get started here. Welcome to our Stock Sermon Sunday. This is our live Sunday stock market analysis, not just for trading, but also long-term investing as well. So there's two people here that come onto my lives. One person is, of all ages, all backgrounds, and they're like, hey, Brian, I was told to buy VOO, VTI. I have this portfolio from my, company match. I don't really know what to do, but I think I'm up pretty good. But, how do you become your own investor, right? And the charts are where the money lies. So That is the biggest qualm, I think, with some people. It doesn't mean you have to be perfect. It just means where are the best buy zones for your favorite companies. And we'll talk about that today because you may be wondering like, man, this OKLO, Brian, have you heard of OKLO? Yes, I've heard of OKLO. We called OKLO at $18. Now it's at $140. What do you do with that information? So a beginner is like, man, do I jump into OKLO? Do I buy it here? I don't want to miss any more moves. It could go to 1,000 and then get slammed right back down. Okay. So that's really my objective on these lives and these videos, is really not the beginner, but to help the person that is like, I don't know the totality of this stock market game. And I'm just kind of investing off vibes, right? Whatever my friend says, whatever my coworker says, whatever, some person says, buy this now. And you're like, well, what's their portfolio? Is it, $100,000 and they can afford to buy it multiple times going down? Or is this your first time buying it and you're like, I'm already down, right? So that's who I'm on here to serve, is the person that really, really, really wants to make some money off this safely within long-term investing and also generate some income from trading, right? It is very possible, if you never believe so, for those that are new or rewatching, I'll talk to you first. It is very possible to make $100 to $200 a day with very little risk, right? I'm not talking about, well, Brian, how much do you need to make $100, $200? Maybe $300 to $500 with the right trade. You can make $100 to $200 with a $500 to $600 trading account. And you just build on top of that if you're taking the right trades. So if anyone's ever told you need to deposit $25,000 because of the PDT rule, cut that. You do not need that much money to trade options more specifically. So that again debunks that, wow, I can do this. This maybe is possible for me with everything that's going on in the world. The job market's crap. I don't know what's going on next. I can generate 50, 100 to 200 bucks on the side, right? And do it properly. Am I speaking truth here? Right? So if you've heard of any of these things, it doesn't mean that person is wrong. It just means that they're talking above people's heads and not bringing it down to a third grade level. And I think that's why a lot of people gravitate towards this particular channel is, man, you explain it in a way that I can understand, that builds confidence in me. Right? So if that helps you, let me know down below, screenshot this, tag me, whatever you want to do on your stories, on your platforms. And I would love to bring more people here. All right. So what we'll do is we'll go to fundamental analysis. Fundamental analysis is our news, the earnings reports for the week, and also our data reports for the week. So fundamentals is news, and then you got technicals, which are charts. Okay. So we're going down both veins today. I'm gonna go ahead and jump into. All right. All right. Perfect. All right, let's go into the economic calendar. So again, I always remind there's new people that come on for the first time here. If you want to follow my analysis, if you ever wondered how does a person do a weekly analysis, how do you know what's going to pop, what's going to drop, all those types of things. This is the first place that you start, which is the economic calendar. Economic calendar is the data reports that the Fed uses to cut rates a certain percentage. So why didn't they cut it 50 basis points instead of 25? Because the labor market is still a little bit shaky. So the job market, more people were filing for unemployment the last labor market report. So if he had, cut rates 50 basis points, you can spur the economy into a downturn, right? Because you're cutting too aggressively. So he cut just right at 25 basis points, but we still got questions of the labor market. All right. Now, the economy does not correlate to the stock market. It does in some retrospects for my, doubters out there or anybody that's like, yes, it does, Brian. There's no reason. And I keep saying this because I'm teaching or trying to explain to the person, an investor that's been in the market and I've been trading since 2018. Okay. An investor actively, that means looking at the charts, not just throwing some money in Robinhood and you're like, oh, I'm up. Like you're actively looking at investments. Okay. If someone is actively in the markets, they are thinking 6 months to a year in advance. A new investor or a new person comes in, it's like, man, let me make some money now. They don't know what type of market they're coming into. So if you're new, you're coming into a market that's at all-time high prints. okay, continuously. That is not the best time to throw and liquidate all your savings account and put it into the market. Okay. The time to do that was when in April, when we had that drop, when I was talking last year. If you were in Leverage University, I said, we're going to have a drop. Be prepared for that drop. We're going to have a drop going into 2025 with Trump tariffs. It happened in 2018 and it's going to happen again. So his first initiation of tariffs, people had no idea what was going to come of it. So they panic sold. That was the time to buy. Now we're at new all-time highs, and it's not necessarily time to load up the boat on your favorite stocks, in my opinion, not financial advice. However, if you're a person that's like, Brian, but I heard like Google's going to be $500 in 3 years, in 5 years, and this and that. Dollar cost average. Go into your Robinhood account, go into your Webull account, and turn on recurring buy. Always be buying. That is okay. But all I'm saying is, and the reason I'm telling you this is because if people reach out to me on socials and they're like, hey, I was thinking about loading 10 grand into Google at 250. I'm like, oh, do what you want. I can't financially advise you on that, but I will tell you that Google's buy zone is back below $200 or closer to 200 again. I would not load up the boat at 250. But if you're going to hold and you don't care about it and whatever, but you might be down for a little bit before it goes back up if we have a pullback. All right. So those are the types of questions when I'm presenting this information is essentially why I say that. Okay. So scared money don't make no money, but it is important to be aware of the type of market that you're approaching. All right. So this week we got Monday, a lot of Fed speakers, and also we need to talk about this Japan downturn, right? How many people have heard of that Japan stock market crash? Where is it? Huh. Maybe it's on news. I have to find it, but we'll talk about that as well. As this weekend, we had a couple of interesting things that came into the marketplace, which was Japan's stock market kind of pull back a little bit. And also Trump initiated the H-1B visa. Okay. India says Trump H-1B visa fee hike could disrupt families. So if you're in corporate America, or if you've heard of corporate America hiring outside of the U.S., man, they keep hiring all these, foreigners to work in my position for a cheaper cost, right? And that's their prerogative to do so. But now Trump is initiating this H-1B visa hike that could disrupt some of the tech companies and start to affect their bottom line if they do have to pay $100,000. So these are things that as you're doing research over the weekend, you, as an active investor, you're like, man, could this be the spur to give us some type of pullback, right? Is this going to affect tech companies? So do I need to be a little bit more careful about tech, maybe pulling back a little bit and rotating? Okay. So that's another thing that we need to be cautious of this week and into the end of September. All right. Another thing as well is the Buffett 220% indicator. And please ask any questions if going over anyone's head. All right. All right. The Warren Buffett indicator has reached 220%, a level never seen before. One of our greatest investors in this time predicted the dot-com bubble where he sat with cash, according to the data from the United States stock market and GDP. This ratio compares the total value of American stock to the size of the economy. The last time markets looked stretched this way was during the dot-com bubble, right? So I'll show you, for those that are the first time here, how in the world could anyone predict that, a COVID virus will come out of nowhere and the market crashes, right? They're called black swan events. Some are bigger than others. And I've continuously said this over and over again, is that we trade the market that we're in. But if you're looking for long-term buy opportunities, you want a 20% correction, right? 15 to 20% from new all-time highs. So I'll show you what that looks like on the charts where we can get buy zones, and you might have to be patient Because if you're new, or if someone just has never seen multiple markets, they're like, this market never goes down. It's not going down. It's not going down. Well, what happened? We gave back all of 2023 gains, right? Excuse me, 2024 gains in 2 months in April. So if you panic sold, you lost all of your 2024 gains. Does that make sense? But if you are an active investor, you're like, man, I'm going to be patient. People can yell and scream. They were going to new all-time highs, but I'm going to wait and sit on cash in my 4 or 5% savings account with Robinhood or Webull, or I'm going to look at some ETFs or some beaten down stocks, and I'm going to reverse engineer my investing thesis. All right. Warren Buffett indicator stocks to GDP. Okay. So let's look at the Buffett indicator on, let's see if I'll pull up an image. Here we go. Off of Threads. Let's see if it'll pull up actually. This is kind of small. Okay, kind of small here, but I'm gonna guide people through it. Okay, so 220% here. Wilshire 5,000 to GDP ratio. Wilshire 5,000 to GDP ratio. Okay. A lot of folks are visual. It's like, man, I need to see it. I need to see what we're talking about. Okay. So if I go here on the chart, okay, at the very bottom, you can see the years. Okay. Very bottom, you can see the years. There's 2010, there's 2007, there's 2000 .com bubble, right? And what we're looking at is this mean dotted line in the middle. Okay. In the middle. So when you've heard, or maybe, you know, on the YouTube streets or Instagram streets, Trump market is going to be the best market. We're going to have some type of crash and we're going to make the most money ever. And there's going to be this wealth gap that's just going to change lives. Yeah, it's kind of already started back in April, right? But that could just be a short stint. I think there's personally, and I'm not right. No one is has any insider information, at least on this YouTube channel. Okay. But this is what he's talking about when they're saying the Wilshire ratio 5,000 is at 139.26% when the .com bubble happened. When the 2000 bubble happened, we were over 100%. Okay. Look at this crash, not crash, but correction, so to speak, when that was in December of 2021, when we pulled back heavy and we had a complete 22 bear market, right? You see the Wilshire 5,000 to GDP ratio was at 191%. And then we pulled back all 2022. It was a complete bear market year. Well, where are we sitting now? Do you see the correlation? What that article was just saying is at the highest. So the Buffett indicator, meaning that Buffett sees a bigger pullback and he sees that stocks, mainly the Mag 7, mainly our tech index, mainly the NASDAQ, is overextended, right? So now it's just continuous momentum to the upside to the point where the hedge funds get together and they click a button. They're like, I'm out, right? Or we have some type of situation, black swan event that comes in. That could be a health scare again. That could be, you know, another CEO type of thing, right? It could be a company gets in cahoots with something. It could be the White House. There's a lot of crazy stuff going on in this world right now. Okay. So if you're thinking, I'm not talking about conspiracy because I'm a data-driven person and I'm also a believer. Okay. But the data showcases that history will repeat itself over and over and over again, but you can't predict when. You can just look at trends and say, this market just seems like an extreme. Who is buying? That seems like an extreme amount of interest at these highs for some of these stocks with no pullback. I mean, we went from 400 to 600, 50% in 160 days. All right. So With all that being said, can I get a 1 in the chat if you understand it? It doesn't mean you have to agree. You can have a counter argument, but do you understand, or are you conceptualizing what people are talking about when you hear on the YouTube streets or wherever, like there's going to be a pullback and you're like, every day I look up, it's green. What are you talking about? Red, right? The stock market only goes up, right? 1, we good? Okay. So David has experienced it. He's inside of Leverage University. And, I look at the charts. I'm a very technical person. If you see David there, right, he always brings up the NVIDIA pullback, right? So when I was saying wait on NVIDIA, I said wait on NVIDIA back to 85 to 90 bucks, just shy of 100. Do not chase this 200, 150, 160 push. It was overextended from here, pull back, rotated, then rotated back up. Okay. All right. Let's keep rolling. So there's my kind of fundamental analysis, a couple of things that I have questions on going into the end of the year. Now, every single day, I've got this in the back of my mind, so I'm not shocked if something just comes out of nowhere, right? But when we're in Leverage University and when we're day trading or when we're finding stocks that are at a good value to trade, making money daily or weekly, okay, I'm typically just trading the market that we're in. So if your question is, Brian, should I start entering puts? Should I start taking profit on my long-term shares? You're scaring me. No. Right? No, trade the market that we're in. We are bullish. Okay. But it just means that keep your head on a swivel. Right? The moment someone looks away, then they look in April and they're like, why is the market crashing? Their portfolio was up 200% and now it's back to break even. Right? So just keep your head on a swivel, check it weekly. Right. And I'll keep you updated here on the channel as well about what's going on. All right. So we got the Buffett indicator. We got the Japan stock market kind of pulling back a little bit. And then we've got some Fed speakers and we have a rate cut. So rate cuts are good. All right. We're supposed to have some more rate cuts as well throughout the remainder of the year. We got PMI as well this week. And we got Powell speaking interesting on Tuesday. Wow. Okay. We got Powell speaking at 12:30 Eastern Standard Time. If you don't know, Jerome Powell, the Fed Reserve Chair, will move the market one way or the other. And we're at all-time highs. So another interesting thing this week. Advanced retail inventories, existing home sales, GDP, that's going to be very, very important right there. And then we got PCE, personal consumption expenditure. So how our consumer sentiments are doing is very, very important. The consumer sentiment has not been, i.e. us, the consumer, has not been very good. It's been okay, right at par. But think of yourself. This is how I like to break down the market simplistically, is think of yourself as the consumer, right? The market's at all-time highs. You may be doing well in your long term. You may be doing well in a lot of your leaps and trades and things of that nature. But can you tell me that if you ask someone on the street, what do you think about our economy? They don't have to know anything. Like, why are groceries so expensive? Right? Why is gas $4 or $5? Right? Why are rent prices up? Why is inflation to wage ratio completely off? So that's, again, what's in the back of my mind when I said at the beginning of this that the economy does not correlate to the markets. So you trade the market that it is, but the economy is starting to get very, very coiled up. Right? Because what does someone do? What does this next generation do when jobs are lacking? When, you have, if any of you have kids in their teenage years or approaching college years, like you start to have questions about college, right? Like, is it worth it anymore to go into debt for, depending on what type of trade it is? The world's changing. We're going online, right? But yet people have $1,500 to pay for a phone. Right? You see the gap that's happening. By the way, I think that new iPhone is trash. I think it looks trash personally. This is my personal. Have y'all ever seen like the new tech that comes out and people try to justify it? They're like, yeah. Like I could get with that. It's like, no. Do you think like Tim Cook. Do you think Steve Jobs would approve of this new iPhone? I doubt it personally. I doubt it. Now, if you have it and you had to get a new phone, like that's great. But only goes up in September, apparently. It's crazy work, right? So why we say that, and I'm gonna jump in the charts right here because that's where the money's made, is we have September is technically more of a quote unquote bearish market month. Okay, more of a pullback market month. And if you noticed on this SPY chart here, we've had, I can even count this as a green month here, even though we close red, but that's the buy up in April, May, June, July, August, September has been extremely bullish, right? That is not normal. Normally you have some type of pullback in September like that, and then you rally into the end of the year, right? That is what we were looking for, right? But it has not happened. There's no signals of it happening just yet. So there's that, okay? All right, let's go over our SPY analysis. So I'm going to go over my SPY analysis. I want you to ask any questions down below. I'm going to go over, if you look at my left-hand screen to give you an idea of this Webull platform, I'm on my main charting platform here. My 6 charts is typically for my day trading if I need to look at multiple things. My yellow is going to be the indices. So SPY, QQQ, IWM, and the futures market. Our blue is going to be our main like Mag 7, the tech stocks that I trade day in and day out. I've added coin kind of to that. And then the purple here, I've kind of put a section for semiconductors because they kind of move on their own. They also move the market. So semiconductors, obviously Palantir is not a semiconductor, but I've put some technology companies in there that have, moved as well. Palantir, Oracle, Marvel Technology. The green, finance, orange are kind of like slower movers, but solid companies. Maybe some swing trade opportunities or some share buying opportunities. All this in white. I've been very interested in all these stocks in white here for me are like dip buy opportunities, like shares, leaps, things that have pulled back almost 80+%. Okay. So if you see me here or if you see anything that piques your interest or you want a screenshot or do a little phone grab or whatever, right? These in white for me are things that I've done research on that are extreme dip buying opportunities that could run 30 to 50+% in the next year. Okay. So if you're like, man, what do I go to if, NVIDIA is overvalued, Brian, or any of these tech stocks that people mention, Amazon, I'll keep buying, but what's something that's on discount, right? And it's some of these red over here. Okay. All righty. And if you have any others that you'd like me to add to the list, please put it in the chat for me. Okay. All right, let's go. SPY analysis here. We want to analyze this from a blank slate and we want to turn off everything here and just look at the candle structure. Okay. The candle structure, as I just said previously, is a nice bullish structure. This is all the way back to 2016. There's our 2020 drop. Then we go into 2021. Right. And then we have kind of that overextension like we talked about earlier, then a complete bear market in 2022, rotate back up. If you're trying to learn stock like formations, this is a nice cup and handle. There's the handle, there's the handle, there's the cupping, pull back and go again to the next level and we break out. All right. So from here, which is November of 2023, we ran all the way up into pretty much the beginning of 2025. So about a year and a couple of months. We were extremely bullish in 2024. Okay. And this is what I was talking about is that pullback that comes out of nowhere that's necessary, that pulls back roughly in that correction territory. If you can look at my screen and see that percentage, you see it pull back about 20 to 22%. That is the time where you want to begin picking up dips, is 20+% from the recent all-time highs. So if I analyze this push here, we're in blue sky territory. So we have no idea necessarily where we're going. Yes, if you're more advanced like myself and you use Fibonacci extensions and things of that nature, and you look at that, there's some levels up at the top, right? There's 692, there's 714, there's 745, right? But I'm looking for some type of pullback closer to this previous high. That would be only right, but we don't know where the top is yet. So I've been mentioning this multiple stock sermon Sundays. Is this area right here would be ideal to keep us moving higher. Okay. I marked this area last time we were on a run. I said, hey, do not be surprised if we pull back to 450, 60 underneath $500. And you're like, Brian, that ain't going to happen. We're at $600. You're talking about a $100 pullback. Yes. That is how we continue higher. The market just does not go straight up in a line. It will drastically pull back and it will continue higher. All right. So if we think this is the high right now, let me do that Fibonacci extension really quick. And let me do a couple of extension here from there, top, pullback. Okay. So just say we push higher into the end of the month for some reason, or we get stuck at this 665 or 670, right? 652, we've talked about that. That's very much possible. 645 as well. But the big area of interest is down here in this 615, 620 for SPY. Okay, if I go into my weekly chart, we've got some levels here as well. At the bottom of here is 620. So if I move that up right there, that is where buyers stepped back in last time pretty heavily and sellers could not continue that, bounced and went up. So if we did want some buy areas, we'd want that 635 and we want that 620. Okay. Now, let me turn on my moving averages as well, and it should align with some daily moving averages here. If you can see that daily 20 right there, 650. As long as it's above that, we're bullish. There's that 635 right there, the daily 50, and then a big buy area right there at that daily 100. Not even thinking about this just yet because that is a full breakdown. That would be like a bear market year. If we get these gap fills down below like this, like that, that would be a full 2022 bear market situation. Okay. So I'm not thinking about that at all because we're extremely bullish. Earnings have been good. Trump has been still holding this market up. So, yeah, but I do think personally we are slightly overextended. So that's why personally in Leverage University, I have been, trying to short the market just on scalps. I don't like trading at all-time highs. My boy Jay is on here. Any trader will tell you that new all-time highs, an active trader, a person that's in and out of the markets on a daily basis, when you have uncharted levels, you try to trade with the trend, but you just don't know when the day is going to come when you get slammed back down. All right. So pullback calls, pullback calls, pullback calls. But if you are able to do so, right, if I see some weakness, I will short for 30% back down to the level like that for puts. All right. I've been leaving SPY alone. QQQ. Now this one's interesting here. I was doing some analysis over the last month or so, looking at the psychological levels on QQQ. And I want you to look at this. Look at when we reached a big psychological level. Psychological levels are round even numbers. Do you see this $400 level? What happened when we went straight up to 400? Pull back 40%. The first time we reached a big psychological level. What happened when we reached 500 for the first time? Right here, 500. Pull back 15+%. Okay. Now we're at 600. Get my drift? Now we're at 600. So each psychological level test for the first time, we have had a significant warranted pullback off of that big level. Build up some strength to take it back out. 500, pull back, build up strength, take it back out. And then we're at 600 on Qs. Get my drift? Cool. Let me check in with y'all. Put a 2 in the chat if we're in the right direction. Put a 2 in the chat if this is making sense thus far. Does not mean you have to agree with it. We good? All right. IWM. Big level in IWM. These are small cap companies. These are companies that benefit from rate cuts very, very well. Okay. And they spurred higher. But we're starting to get a little bit of profit taking here. And the reason is because we were sitting, look at the futures of IWM, RTY. So even though IWM broke into new highs, RTY, which are the futures, right, of that, look at where we're sitting. Right in resistance. Right? So I'm telling everyone here that, you know, yes, you may want that IWM 250 break, but it might want to pull back just a little bit before we get that 250 IWM break. All right. So IWM, if you're an IWM trader, I'd watch for this bull flag to hold up at 240 to 242 and try to rotate back up. All right. But be careful at the top here. If we can't break it and it starts to get stuck, we can do that and we can do that. Okay. It'll be a little bit of a kind of a head and shoulders situation. All right. So IWM, I'm going to watch back up in this 245, 246 area, back at the previous highs. If we do rotate, if it gets stuck right here at that 244, then, you know, I'll be looking at something maybe like that, a little bit of rising wedge, kind of bear flag like that. And then break out of there and come down lower. The bottom end of the range on IWM is sitting right at about 235. That's where the big buyers are. So right down in here in this range, if IWM does decide to pull back, it'll probably want to do some type of big liquidity drop back down through that volume area on that we had from Powell on the rate cuts. So you see we popped up on rate cuts, came down on rate cuts, then we start trend back up, but this hasn't been a very strong move, right? Because we kind of sold off here and we're back in this channel. So not convinced on IWM just yet. It might want to pull back, and that just seems to be that the rate cuts were already priced in. Everybody knew we were getting a rate cut. Great, got the rate cut, spurred a little bit higher, and then they're like, all right, cool. Pull back a little bit. All right, so 235, 237, you want to mark those levels. That is going to be your ideal pullback for IWM, unless it holds this 240. So 240, first level, rotate, IWM, better level, 237.50. All right, let's go into our main stocks here let's touch on Apple. All right. Apple extremely bullish from the iPhone release, AirPod release, the new orange thing, what do they got? And it's trying to get to this 250. All right. So Apple did have a little gap to fill. Let me see if it'll pop up. I think it already filled it. Yeah. Filled it right here. There's a little gap right there at 246. But if you look at this, okay, Apple's got another big level to break through. So this is what I meant by the title of this video is wait for the pullbacks, don't chase. So if you missed Apple, you'd want to wait for Apple. For my Leverage University members, you know, Apple with this gap fill here, you'd want to wait for the pullback to see. Because, yeah, just in case it goes higher tomorrow and it gets up to that 250, that could happen, and there's your entry. All right? So 240 to 241 will be the first entry. The next entry will be full gap fill, probably back down to 235. Something like that. They'll get pretty aggressive. Okay? So Apple, watch up into this 246 to 250 area of resistance. Look to your left. What did it do last time? All right. So if we break through 250, you see we got blue sky territories with another gap up at the top here to 260. So if you're bullish on Apple, right? And you're already in, or you're already in call options and things like that, I like it to get to that 260 plus, take out the highs. But if you're, I tell my folks all the time, like entries are important, right? So if you're trading options, entries are important. I would want to enter a call option, ideally, back into this 240 area if possible, right? But I'd want to be patient because the market's at all-time highs, right? So I'm just looking left. Just looking left. What happened last time? Pulled all the way back to that 220 level, 225 back there and lower. I'm not saying it's going to do that, but the higher it goes straight up without any pullback, I'd rather just wait. Or we might look to short Apple with a stop loss above 250 if it does push a little bit higher. Okay. All right, let's go to Amazon. Amazon's been a little bit weak here and not a very pretty chart in this area. The only thing I can see on Amazon is keep buying it up. If you got long-term, keep buying it up. But if I look on a weekly chart, look at these weekly candles on Amazon, right? It's been this slow grind back up into this resistance area of 236, okay? So with Amazon, it's got to get going or it's going to start failing underneath this 230. And that's not really what we want. All right. So I got some levels on the bottom end of Amazon back to 220. Okay. That's the big pullback level on Amazon, 220. So if you want to mark that on your charts, 220. Then we got a light little level here at 223 to 225. So it might stop right there, bounce, and then try to go right there if it does fail that. But not necessarily liking this Amazon here up in there because of those top wicks that are starting to come in, and those big sell volume candles. Okay. Google, I got nothing else to say other than I'm just waiting on it to cool off. I don't know where the top is. Some of y'all are like, I know where the top is. Okay, well, maybe 260, right? We thought 250 was the top and it was going to pull back. Sellers failed that, rotated back up. So that's Google. These gaps will get filled. Y'all know. If you know, you know. These gaps will get filled. So Google, at least a pullback to 240, fails that 240 very aggressively. We got nothing in here to 225. So this is what I'm talking about. If you're looking at Google, is please be careful if you keep entering calls. It's not a good risk to reward, in my opinion, on this trade for the upside. Shares, let it ride. Trading, I've been leaving Google alone, and I love Google. I love trading Google personally. All right, Microsoft. It got some buyers interesting towards the end of the day, and Microsoft broke this downtrend here, held 500. I kind of really want to watch this 520 area here to see if Microsoft continues, but not really interested in that. Meta, have not been interested in a while, but Meta did reach back up to an interesting point here back at highs, which I was waiting on it to fill that gap back up. So right underneath 800, is this the double top that Meta was looking for, or do we break out, right? So does Meta pull back like that and finally give those gap fills, or does it break out? Don't know yet, but it's actually interesting back up in this close to 800 level. If you wanted to know, I like trading weekly levels. So if a company is at a weekly level, I go into my weekly and it's sitting at a weekly resistance or a weekly support, then I get interested because I can control my stop loss depending on what type of trade I'm taking. Okay. I also look at the candlesticks, how they're performing. This is definitely a bull flag, but still can't get above that 800 yet for Meta. But Meta is $1,000 stock in my opinion, and is still forming higher lows, higher highs, and trending upwards. So I think Meta will break out into this trend and will continue past 800 and into new all-time highs. All right. Tesla. We were talking about this in live trading. I think Trent brought it up. Tesla's in this interesting rising wedge here, and I'd be very cautious of where you get into Tesla if you're looking for calls. Okay. If you're trading it and you're looking for calls, your entry point ideally, okay, ideally on entry for calls will be back down here closer to 370, or you could test this $400 reclaim. It would look something like this. Pull back to 400, reclaim it, and then you can go to that 460. I still necessarily don't like that trade personally because this is a very low volume like rise here. So I've taught the community as well as when you have a straight up move, typically you have a straight down move, right? And that puts it right back at 370. Okay. So we got to break through some levels first. I know Tesla's extremely bullish, but where is your entry point if you're trading it? Okay. We're back up here into these highs, sitting right at 435. If I do a Fibonacci extension, or excuse me, a Fibonacci retracement here on it, if I go from the highs back to the lows like that, we're sitting at that 78.6%, right? Bulls like to hold the 61.8. So that strength push through the off the 50, up through the 61.8. And if we get a pull back to where, right, we were saying 380, 370, 390, just slightly underneath that. If we hold that, that could be nice. Okay. But I do like this 370, 375 area if you're looking to trade Tesla. Now, well, Brian, what if we don't get a pullback and it just breaks out? Okay, well, I look at a breakout above 440, but I still don't like breakout trades. I don't like this up into this heavy seller area where we're in blue sky territories. Yes, some of you might be looking at Tesla going to 500. I do think that's possible, but need a pullback ideally, okay? If we just go straight up, I'm just going to let it go, let my TSLL shares ride. All right, let's go into Coinbase. Now, this one's very interesting. It is a big player. You can trade Connell if you want to. So TSLL is the Tesla leverage version, if you can see there. So when Tesla was at all-time highs at 40, $480, TSLL was at 40. This is sitting at 20. So there's this cheaper, more inexpensive way to trade Tesla if you want to for TSLL. Okay. Same thing with Coin. It'd be Connell. So Coin is interesting here because it's sitting right at that 350 level, 345, 346 with a nice bull flag structure kind of forming out. If it breaks out above this 351, there's nothing but room up to 370 in my opinion, and then 380, and there's a gap fill. Okay, go to the gap fill here. There it is. So I think this is priming personally to do something like that. All right. So if you are looking at that, it is a big player. And you can see these contracts putting time on it, $1,700. Like you can maybe look at next week contracts. I'm not going to give any specifics. I'll talk about it inside of our community and our Discord. But some people are looking at that 400 level, or maybe a weekly that they could get a move on up to 360. Excuse me. They can maybe get a move. A lot of interest on those 360s. They'll probably be close to like $300 and some change. So 360 is a target, and then maybe you can get some movement on some 370s. A lot of interest on the 400s. Maybe someone's like, what if we get some big squeeze? It's $90. I'll take a chance on it. So those 400s for weeklies could move, but I would not stay in those all the way until the end of the expiration on a weekly contract unless it's a runner. We good? All right, NVIDIA. Jeez. Sorry, guys. NVIDIA is an interesting chart here because we gapped up right at 168 support that's holding. We gapped up into this resistance and we have formed this lower high channel, okay? So it's kind of messy here because you could look at this as like an inverse head and shoulders like that, and it could just break out, right? But these top wick candles, I'd rather NVIDIA somehow get a little weakness. Every time I try, Trent knows, or any of my community members inside of we talked about this. I said, I'm going to enter some NVIDIA calls on Monday. And before you know it, NVIDIA was already at 176. I was looking to enter NVIDIA calls right here. We had that news on Monday morning and we gapped up. So that's the only thing about options is that, you know, your trade can be kind of messed up overnight, depending on where you want to enter. So I would love NVIDIA to fill this gap back down, back to 171 and then reclaim, and then we go. But if this 175, 176 holds, that is a big level of support. See buyers for previous support right there, previous resistance below 174. So this is holding right now. All right. But it's kind of ugly in there. AMD, man, this AMD is interesting. It's got gaps below. So I've been talking about this for weeks. I think this AMD is priming for a big move. It's got to get up out of here, out of this 164, like with a big candle out of there. Maybe MU could do it. We got MU earnings on Tuesday, but I'm looking for that type of move on AMD. Is a big move up above 161, ideally above 164. Give me a slight little pullback and go. I think this is still an early entry for AMD. So if y'all looked at that trade idea inside of leverage, I think we need to be a little bit patient, because what if this rolls over here and comes down there, right? So, man, I want to catch a big AMD trade because my chart analysis on it is pretty good. It's just the entry on it. And if you're not inside of leverage, or if you don't live trade with myself and in the community, my drawdown is very little. I don't like to enter and keep entering. If I am at a level, my drawdown is very, very small. Essentially means that when I enter a trade, typically within the first 5, 10, 15 minutes, I should be green, right? So I'm very precise on the entries. And if you're not precise on the entries, you got to put time on your contracts. I typically trade weeklies or the next week contract. So if you did want this AMD and you entered right here and you think it's going to 170 plus, I mean, there's a lot of interest on the next week 170s. That was the contract I was kind of looking at. A lot of interest. I don't know what's going to happen. I don't know what they're seeing, but a lot of interest on this. Maybe we can get involved in it just in case. But if that move happens, those 170s will absolutely fly. And they will be close to probably $500, $600, $700. Okay, so their next week 170s, I'm kind of looking at it. And I don't like entering blindly, but this might be a double bottom. It might break out the previous high, get back above it, and it's sitting in support. This almost looks exactly like how NVIDIA looked before it took off. NVIDIA sitting right here, double bottom. Next morning, took off right back to the highs. All right. So AMD on high alert of what it does. It looks like it's consolidating and building. It's a big bullish candle off of there. All right, MU. MU pulled back nicely before its earnings. And this was a trade idea I was looking at on Friday, but did not enter it. MU has been absolutely extremely bullish off of this 112, 120 break, and then just breaking new all-time highs. So personally, on Monday, I think this gap will get filled, but the IV, the implied volatility on this is very high. So that means the contracts are essentially pricey. All right. So I don't know if I want to mess with MU technically with those high price contracts. I may trade or look at some of the other semiconductors along with MU. But MU has a lot of interest on those 190s. People thinking that MU is going to just absolutely blow the top off with earnings, and they could. Right? They've got a 11% move. 11%. Okay? So that means that if they make a move, 11% off of earnings is probably going just shy of 180. If they beat earnings. If they miss earnings, 11% to the downside is roughly around 145. Right. So there's MU. Let me check the chat. Any questions, thoughts, perspectives? Caught that NVIDIA. Nice. The WordPress whisper. IWM has been a beast. Just shouting at everybody. Thanks, Chris. I appreciate you. If anyone else wants to, put down below what they're thinking, just give me feedback as I'm going through. I'm always trying to improve of how I'm delivering this. Hey, Brian, you're speaking a little bit too fast. Hey, I'm understanding. Hey, we're on a good pace. Just let me know. Let me know. Never want to lose anybody. AVGO. And if there's any stocks you want to take a look at, like anything that's speculative, or I'll take a look at OKLO, things like that. We'll take a look at those as we're approaching the top of the hour. All right. AVGO, not really interested. It's moved nicely back to the downside off of those Oracle earnings. It's got a gap right here, but it's sitting in support at 336. Again, if you haven't learned my strategy of like what I like to see, if there's a gap up, I really want to see that gap get filled. Right? If there's a gap up on a stock or their earnings or something like that, for me to feel comfortable trading it, I need to see that gap fill back to the downside for me to trade it back up. If you have a different strategy, cool. But I would rather, get the gap fill. So that means, I get really interested with all these gap ups on MU, right? Get really interested because when it falls, it falls. Right, and all those gaps get filled, and then next thing you know, MU's back to 120. Right, so that's kind of my what's going on in my mind. All right, Palantir. Palantir really just trying to retest these highs. Really nice bullish structure. This chart almost looks identical to coin. Right, this coin chart looks almost identical before it breaks out. You see here, consolidating. Right there, break out of that falling wedge, retests, moving, and then trying to get all the way back up here to 400 plus. So by when, I'm not sure. Maybe within the next couple of weeks, in the next month, coin will probably be back close to $400. Okay, so do with that what you wish. Here's the same Palantir chart, looks roughly the same. Broke out, retest, started moving back up to 190. I don't really like the risk to reward here, personally. I think Palantir personally can pull back closer into that 175 level. Kind of since he's already doing it here. Let me see if there's a gap or anything. There's a low volume move here. And if I move that there, all right, I would ideally want something like this. Hold, and then go. All right, so that's close to that 176, 177 area would be the best risk to reward if you're looking for call options or if you're looking for bullish move back on Palantir. If you've got a bigger pullback area, I can see that too, back to 170, right? And then go, it would look something like this, back to this 170, hold, reclaim, go. All right, and that would still be technically a higher low on that trend line. Stair stepping its way up. All right. So Palantir, it's bullish. I don't really like the trade idea for the week on it, so I'll leave it alone. Oracle, just double check on this. Massive gap fill. If you remember, Oracle missed on their earnings. They were just very strong in guidance. So it does not surprise me that Oracle is moving from 345 back down to 300 or 287 to be more specific. So wherever Oracle decides to rotate back up, I really want it to rotate back to 335 or higher, have a good risk to reward, and trade it back down. Personally, I want that full gap fill back down on Oracle, and I'm going to mark this opening print from its gap up, which is at 319, and then that candle right there, which is at 311 or 310, roughly 312. So that could be a rejection point. And then that could be a rejection point. And you see what it did in that area. Popped up into it, rejected it, came lower. Popped up into it. Does it reject and come lower? So Oracle, do with that what you please. It is a bigger mover, so I need a little bit more of a better risk to reward on it. I need to see what it does personally. All right, Robinhood, 125. It's broken a new all-time highs. We'll just have to see what it does here. If it holds above previous highs, there's nothing but blue sky territory. But I do love the higher Robinhood goes, and you already know what you see. Okay, that Robinhood could have a pullback into that 118 minimally. Okay, if I see a red candle come down back underneath 123 and some change right here, 123.45, right? Breaks down back under it, comes back. That's a head and shoulders, and I'm looking to target. Sorry, guys. That 118. Okay, as long as it's above this 114, 115 area, it is still bullish, right? Well, Brian, when is this thing gonna happen like that? When are we gonna get that? I think some kind of black swan event's got to come in, right? Some type of negative news headline on Robinhood. Robinhood CEO Vlad does something stupid, right? Trump does something to prevent crypto Robinhood. Like something has to happen for this gap, in my opinion, to get filled. But we can easily get this one at some point in time over the next month or so. So if it pushes higher, 125, I'll pay attention to. If it keeps breaking out higher, I will just leave it alone. If you want to take breakout trades, if you're a breakout trader, take it. Break above previous day high, new high. Take calls. All right. Thomas, I have not forgotten about you if you're still on here. I'm very adamant about that, about keeping my word. So Thomas, I will, and for anyone that wants to stay around just for the end here, Thomas came on early and he asked at the beginning of the chat, hey, I'm paper trading. I'm trying to come up with a strategy or some type of trade I can continuously look for. What would you suggest? Okay. And I can give a couple of easy trade ideas that you can look for, and some things, people ask all the time, what do you trade? Like if I decide to trade, there's so many things on your watch list. I've traded everything on this watch list. All right, so I'm very familiar with the ATR, the average true range, how the stock moves. Is it tight spreads, wide spreads? Can I get a big move on it, or is it not moving? There's not enough volume, right? Things like that. That's why you see traders stick to the Mag 7. They don't jump all over the place. They're like, no matter what, I'm trading Apple, Meta, Tesla, Amazon, Google. They just stick to those because you can count on that being volume. I've been kind of leaving SPY and QQQ alone, but if you master those, they've just been doing some crazy stuff lately. So, would you leap put on Oracle? Yeah, you could. Not leap put. It would be a short swing. It's their guidance is so strong that when it pulled back, what did it do? Got bought right back up, and you don't know where it is. I mean, retracement, if I do a Fibonacci here from the lows, that was right at 50%. So what I would say is, if you think about it, Marlon, if you're looking at it for that gap fill, I just don't like the wide ATR on Oracle because it could move all the way back up here to 340. But if it stays below this 305 or fails back below 305, I could see that. So if you turn your alerts on and get a failure back below 305, I think that's where you can get that 280 move, right? So I wouldn't put a leap necessarily on it. Maybe a short swing into the end of the year. When I talk about leaps, I don't do personally leap puts. I'll do a leap hedge, but I won't do leap puts. Like I think personally, SPY, QQQ, like let's take a look at it really quick. I don't want to get too much off track, but SPY, actually let's do QQQ since a lot of people are interested in that. If I go all the way out to January and I go to the put side, January 2026, and I go to the put side right here, and there's the ask, there's how much the contract costs, and then there's the open interest. If I scroll down, do you see the call interest is very little, right? Maybe 700. People think it's going to go up to 700. I doubt it's going to move up another $100. I can 99% tell you it's not going up another $100, at least right now. But look at this hedge on the downside, right? 540, 550, 530. So people are already starting to buy some puts up against their portfolio for a big pullback just in case, right? And I've talked about that before, is maybe I should make another video on that, is hedge funds, if they're up 100, 200, 300%, or an active investor, they will buy puts to hedge their portfolio. So as the market's coming down, they're making money on their puts, so their portfolio balances out, instead of saying, man, I was up so much and then I'm down. So that's one way to hedge your portfolio if you don't know when the top is or when the big pullback is, very similar to April. People are buying hedged puts up here. 538 down to 400. Their stop losses were just getting hit. Meanwhile, someone that bought puts to hedge is like, I'm good. I'll just buy the dip when it gets down here. Same thing. Cool. Another way to hedge would be SQQQ. I always talk about that. This is the short version, and I wouldn't necessarily do calls on this. So when the market pulls back, SQQQ goes up. Okay. Here's August. It was at $26. It went all the way back up to 60. Okay. So if some type of big pullback is coming in the future and you're up tremendously, you may want to start grabbing up some shares of SQQQ so you can say when the market pulls back, hey, did you hedge? What do you mean? You didn't buy no SQQQ? Right? You can tell your friends, tell your coworkers, tell your folks that, wait a minute, my portfolio is good. Like, I'm fine. Are you good? Nah, man, I don't know. I don't know to sell or what. I'm so frustrated with this market. It's because they aren't looking at charts. All right. So SQQQ, I would not be opposed to buying just in case tech pulls back again at some point. All right. This goes up when the market pulls back. Excuse me. All right. Top of the hour here, coming in right at an hour. So we're still making good time. I appreciate everybody for staying on here. I know if you're on the East Coast, it's getting late, so I'm going to start wrapping up. Please put down anything down below. I can literally cover this whole watch list, but I want to end off with things that people can purchase like going into the end of the year. I think that's a big question. Insurance. Yes, partial gap fill. Would you a leap on Oracle? Okay. Insurance. Let's go. Insurance watch list here. Okay. And let me know if you want me to create a video or a YouTube video over my watch list. I think some people have mentioned that it's so organized over here, or what's in IWM, what's in DIA, what are the EV stocks, beauty, like all of my stuff is organized based off of sectors, Chinese stocks, so I can easily find things. All right. If I go to insurance here, Berkshire. I like where Berkshire is sitting. I like that bounce off 460 and then rotating back up into new all-time highs. Aflac, bullish. There's a clean bull flag right there. I don't necessarily trade these. That's the only thing, Marlon. I don't really trade these, so I can identify what you want to do with them, but I think probably Progressive. I like the dip on Progressive probably the best because it is from the most recent highs off almost 20%, which is correction territory. So I just watch it to see it, make sure that this is a bottom. I probably need to see it clear out of this consolidation first. All right, break out of that back above 250, but I don't mind that. This Prudential is not bad. I would need to do fundamentals on some of these because some of you are like, that's a horrible insurance company. I would not invest in them. right? That's what's kind of on my mind is I would need to do a little bit more fundamentals on some of these, but insurance companies, they make bank, so they're not going nowhere. But I don't know if that helps. I don't really trade personally, and I would need to see a bigger pullback on some of them, but they're steady. They are steady. Okay. All right. I'm going to end off here with like safer plays. Things that, Brian, if I were to just hold something for the next 3 months or do a leap on it, or do a big swing into next year, what can I get 30+% on my money on within the next 3 months to a year, right? Potentially even sooner. Very similar to like an OKLO, which is a little bit, ridiculous in my opinion, but we got OKLO at $18. So inside of our community, we put OKLO in there just to show shares and leaps. And there's OKLO right there at the beginning of the year. January 3rd, 2025, OKLO was at $18 where I saw that pullback from the chart, bullish structure. And now I didn't expect it to go this much, but $18 to $20. And now it's sitting at 130, 140, right? But the funny thing is OKLO is making no money. It's kind of like an SMCI type situation where it's no rationale for this going this high. Now, Marlon, you might be like, do we short it? I can't step in front of this confidently yet, but I mean, it could be a big short opportunity depending on if I see like a weekly red candle start to form or a failure of a daily candle over previous days, something like that. But it could easily just go to 150 and then 160, but I'm not really interested in trading it at this point. Contracts are extremely overvalued. The implied volatility 150%. But if you want to trade it, you're more than welcome to. Extreme volatility, be careful. Alrighty. Let me work my way up here. I put a bunch in the community here, so I'll just give some. All right. VRC. So I'm going to start with the consumer discretionary. Consumer discretionary with rate cuts could be pretty decent. Okay. Consumer discretionary are your favorite stores, right? That you shop at, that you buy from, right? And people think there's no money in the market. No one's buying from those places anymore. But when money is pushed back in the market, if people feel more confident in the economy with rate cuts, then these stocks could be a nice hedge towards the market to go back up. So Michael Burry is starting to invest into these. Warren Buffett sitting on cash, right? Michael Burry's position right now on Lululemon is one of the highest. So VFC, okay? This is if you're a fan of Vans, okay? I personally wear some Vans. If you ever had a Jan Sport backpack growing up, okay? Jan Sport backpack, right? This is the overarching company that is housing these companies. So you can look it up. So VRC sitting very nicely at a very cheap rate here, and it could be a nice hedge. If you look, it's back at 2000 lows, which is .com bubble. Okay. .com bubble hedge going back up, right? 2008. Look what happened in 2008 when the market crashed, right? What happened is people rotated into consumer discretionary and healthcare. Okay. Rotated back up in 2008 from $30 to $178. So VRC, in my opinion, shares and or leaps. Okay. Shares and or leaps. So this is good for a beginner, in my opinion. If you're familiar with these companies, it's like, oh yeah, I know Vans and the Outlet and JanSport and people going back to backpacks and this and that. Like, look it up. Okay. So leaps out to 2028 are only $300. Okay. If you go to January 2027, there's a lot of interest on those. I could see this back at a target of 25 minimally. So look how much interest is on those 25. right? I feel like David is like licking his chops right now. He's like, oh, another leap, right? 25. This is free game, folks. Okay. I don't know why folks don't show up. I'm not saying that folks don't show up, but I'm like, I'm not asking for nothing. I'm just saying that if you can win, then you'll be more confident and trustworthy that, hey, this dude maybe knows what he's talking about, right? So 25, a lot of, and this is a safer play for leaps, and you can also do shares, okay? Because we've looked in the past on the chart of what happens, okay? So anywhere between $10, right here, starting to form a little bit of a breakout, pullback, and then it takes out that 15, there is very little liquidity here, and it will go very quickly to 25. All right, just like that. All right, so there's one. Let's look at BBAI. Okay, people are always looking for the next AI company. Man, where's another OKLO or something like that? BBAI, Big Bear AI Holdings. You can look it up. There's some technology centers, things of that nature. This is very similar to when we called out Ionic a couple of years ago. It's sitting at $5, a nice structural kind of inverse head and shoulders, higher lows forming on a monthly time frame, right? And this is very bullish, right? You can see the bull flag, pop, higher, pop, and then it will eventually take back off where you can turn this into a double up, right? So minimally from 6 to 12, minimally. Now I can't say where it's going from here. That's fundamentals. Like if you're a person, man, I know Big Bear AI and whatever, like if you're talking about that, like an OKLO move, I can't tell you that because I don't know, right? I would have to do more research, but I'm just saying that if you're looking for easy money, 100% on your money, so you've got $1,000 and you're looking to do nothing within the next year, right? This can go from 6 to 12 or even 6 to 10. That's 60 to 70% on your money. Is that not beating your savings account by just using the charts? Okay. So there's one. Let's look at BRKR. BRKR. Okay. This one is beautiful as well. Look at this. This is why we don't chase. The title of this video, right? BRKR went all the way up from, and this was a question with a one-on-one client. So I do have one-on-ones that I do a 5-week mentorship with to show them. I'll be starting another one for someone this week. So if you're interested in like, hey, Brian, I want one-on-one with you. Do you have those options? Yes. Right, it's a 5-week mentorship. If you want longer, that's cool. But the question becomes like, how do you know that it's still a good company to invest in, right? That was the question of this person is, well, if Lulu's so good, why was it $500 and then pulled all the way back to, is because it's rotational, right? When tech is going up and everyone's in a tech boom and everyone's focused on tech, that's a sector that's going up for that period of time. We have had an AI boom or a tech boom for the last 10 years, right? 5 to 10 years minimum. So now that tech sector, very similar to 2022 when Meta was at $80, right? That rotation can happen again. So when tech pulls back, they rotate their money into, right, consumer discretionary and healthcare, right? These are recessionary proof stocks. Starbucks, McDonald's, Lululemon, right? And I know people have questions about, some of these stocks like, hey, who's going to have money to buy $100 pair of leggings? I'm not saying it's going back up to $500, but I'm saying it can double up from here, right? Minimally. UNH, probably the easiest one. CNC. Okay. So let's keep going. BRKR. Okay. BRKR right back to 2016, 2019, and 2020 lows, and also forming somewhat of a hammer candle where buyers are stepping up on a monthly. If I go into a weekly here, it's okay. Maybe you can look at this as a double bottom. I probably want to see how this week plays out, but I like this anywhere between $25 and $30, right? With a target of 50 minimally, right? I'm just talking about double ups. If I do a Fibonacci retracement here from the lows right there, our golden pocket is sitting right above $43, and that puts us right in that $50 range right back up here into there. Okay. And then it maybe take off from there, depending on the innovation and whatnot. We can get that. We can get that. For my non-believers, you want to see CVS? What'd CVS do at 2019 lows, 2020 lows? 2019 lows, bounce right off 44. Where is it headed? If I do a Fibonacci retracement here, just to make people believers here. There we go. Where did it head? Right into that golden pocket. $55 was a target. Where'd it go? Right to 55, held in this zone, took off from that zone. It's not rocket science. It's just we weren't taught these things, folks. When you know the tools and you know the patterns and you've seen some of these companies and you're like, man, I know CVS. They ain't going out of business anytime soon. Now, Walgreens, questions, right? But CVS wasn't going out of business. $44. Okay. All right. Let's go into Hims. Got to mention this. Hims is $100 plus stock. Okay. It is. I talked about it at $40 here. A lot of us have it below 25 back down here. And this is what a stock looks like before it's ready to take off. Do you see how it IPOs and pulls all the way back? Everyone's like, it was a wash. It starts to build profitability, confidence. And you look at the structure, that is a cup, handle, higher lows, breakout, pull back. There we go. Where was it headed? Right back to previous highs, $25. Now 25 is holding as support. Now 40 is holding as support. And now 50 is holding as support. So anywhere around $50, in my opinion, you can start a position on shares on Hims if you're not already in. But not financial advice. I'm just showing you the charts. All right. Nice hammer candle on a weekly. Where is it headed? Right back up to 65, right? That's what it did last time. Got above 50. Right to 65. Then we can talk about 70. Then we can talk about new all-time highs. TTD. This one's going to take a minute. But I still got my eyes on it. Still showing bearish structure here, but it is back in support. Okay. It had pretty decent earnings. Their CEO was solid on earnings. Maybe the next earnings report, right, can spur this higher again. So TTD at $44. Massive gap back up to 90, starting to form a little bit of a hammer here. It's going to take a minute. So this is in leap territory. Okay. This is in leap territory. Leap territory for me is over 70+% off the highs. Okay. Sometimes 100% retracement on a company that is proven to be true. Right. And we look at the charts and we take our risk on it. Good risk to reward back to the upside. Okay, CNC, another one here. We talked about this at 25. You see it's right here at 25. What happened? 25, took a minute. Probably took 2016, then pretty much the whole year of just consolidating at 26, but then took off. Okay, so this is interesting. All right, and we're coming to the end at the hour and 15 mark. So sum this up. I have questions about 2026. I have serious questions about 2026 because if these recessionary proof stocks are at lows, right, like healthcare and consumer discretionary and no one's spending any money and the tariffs and all this kind of stuff, but tech's at all-time highs, I kind of got some questions for 2026. Is that our 2022? It's kind of ironic, not conspiracy, but it's kind of ironic that Trump, right, got elected in 2016 to 2020, right? Biden came in, we had a 2022 bear market, but in my opinion, that was still kind of Trump's market. And we had that big pullback because he rode tech so far up from his first tariff move. We had extreme bullishness into 2021 after he did all his things from his first term. And then this one is kind of coming off Biden. And then we're going into a Trump term and he's initiated these tariffs. We had that big drop in April, big run up now through 2025. But then our tariffs still not hit yet, right? We've got this H-1B situation and it's 2026 or 2022. I don't know. Just questions. But I'm just saying that if it is, we want to be prepared for those dip buys, because 2026, 2027, if we do have some type of bear market, that's where the real kind of quote unquote wealth will be built. Not just this April to September move. Okay. So that's where your mind would want to be. Celebrate your wins, your retirement accounts, your long-term, all that kind of stuff, but get excited for a full bear market year. Get excited for that. If you've heard of any other investors talking about it, we want that. Average consumers are like, no, please do not, pull my market back. I can't afford to take another hit on my portfolio. It's going to scare me to death. You want that. You just need to learn how to read the charts and protect your accounts, or hire someone to do so. All right. Let me check the chat here. Puts as insurance. And I mean, okay, guy, insurance. Exactly. So Marlon is inside of our community. He's talking about use puts as insurance. Right? Use puts as insurance. Right? If you don't know how to do that and you're trying to figure out on your own, please ask. Come back next Sunday, right? Comment on some of the videos. I'll try to answer. I know people have reservations about joining community. Maybe you're already in one, but you're trying to figure out who's right, who's wrong. It's okay to be a part of multiple. It's okay to ask questions. That's why we're here, right? So I'm just trying to show the repeated patterns, right? That's all I'm trying to show. All right. Thomas is asking, what should I look to trade, right? If I am like starting out trading or whatnot. Personally, I think SPY and QQQ are fairly difficult right now. They're very volatile. So if someone says, hey, only learn SPY or only learn QQQ, I recommend learning them, but I still think that they're not the best movement back and forth, because some days they can chop, some days they can move higher, some days you can get those big whiplash moves. I personally would say for a beginner in a Trump market, SPY and QQQ can still be very tricky, okay? But right now, what I would say is IWM is very nice. What I'm looking for anyone that's starting options trading in some form or fashion, but doesn't want to put a lot of risk, is something that has a very small average true range. So it moves in a day-to-day basis around $4 to $6, right? How many of you put in the chat below, right? Because I love trading Tesla too. I like trading Meta too. I like trading those big moves on coin and whatnot. Yes, you can make a lot of money. But if you're on the wrong entry point on that trade and you just enter calls anywhere and it pulls back $20 before going higher, that's the trouble with people getting in of some of these bigger stocks. You can make 30 to 50% plus on these $5 to $7 movers. Okay. So if someone is just starting out, that's what I would recommend. It doesn't mean just starting out. Like I've even switched. I was trading Tesla and all these things in a Biden market because it wasn't that volatile. But I switched my strategy to Google, to Amazon, to sometimes Apple. I've left Microsoft and Meta alone. I've even left Tesla alone. I try to catch coin. I don't like how wide making a $50 move if it gets away from me. That's just me. All right. I like being in control. I like being where it is right there. I don't like it to spur up higher or lower randomly. So I would say IWM would be really nice right now for anyone that's looking to start options trading, because you can put time on your contracts. So if I'm looking, first thing I want to look at is the contract time. So if you're beginning and you're not in a community or you're not in live trading with anybody or following along or trying to learn live, right? I would recommend going on the indices. So SPY, QQQ, IWM, at least a week out. So if I'm looking to trade IWM this week, I would look at probably the 30th, because this Friday is the 26th. I'd probably look at the 30th, right? And do you see how inexpensive the contracts are, in my opinion, on the call and the put side? I can get things right around where it is in the money for $150 to $200. And that's on an indice for being a week and some change out. That's a long time, right? And if you get more savvy, or if you're like, hey, that's a little bit much for me, you can look at trading weeklies on IWM on a Monday, right? So that'll be the 26th or the 29th. Okay. And you see a lot of interest being built on these on the call side, open interest, call side, and the put side. There's that 235 I was just talking about, 82,000 on that 235, 234 that I charted out for a pullback. Okay. And look how inexpensive these are on the call and put side. All right. Right in the money, 175, right in the money, 150. I think that's a sweet spot for anyone that's starting out options trading, is per contract, 100 to 150 bucks. Because guess what? The question that comes is, Brian, what like I'm trying to start options trading or trading in general. How much should I put into an account? You can start with 500 bucks. So if you take the right trade with one contract that's $150, right? That's a fourth of your account size. So you're not even using the entire account, and you can still get the same 30 to 50 to 60% moves on these stocks. Okay. So just want to share that with you, that IWM is one with the rate cuts right now. I don't think NVIDIA is bad. Contracts for NVIDIA weeklies and even the following week, they're not bad, right? Because you can get a $5 to $8 move on NVIDIA. I don't think that's bad. It's still just very volatile, but I don't think NVIDIA for a week out or putting 2 weeks on it, this is October 3rd, right? If you think it's going up based on analysis back to 180, I think that's, 185, maybe something, but 150, a little bit far for me, in my opinion. It's got to get through 181 first, and then a pullback to that 170 or 168. You see, it's 150, right? So NVIDIA is not bad. AMD's become a wild bull. Some people call it the advanced money destroyer. It is more volatile, in my opinion, than NVIDIA. I need an ideal setup on AMD. If you know, you know. Okay. What's another one? Hood's been decent, but the contracts are getting a little bit pricey, right? To start off a week, I don't want to see in the money being $400, right? On a Monday being $400. I don't really want to see that. SoFi has not been bad, right? Do you see here on the weeklies on SoFi, those contracts, if you entered on Friday for calls, they went 100%. So that means this 30 call was about $40. So you could have entered probably 2 or 3 of those contracts with a week on it, right? And made 100% on your money. So if anyone's telling you that you need a lot of money, no, you just need to learn how to trade and what stock to trade. If you have a $500 account, there's no reason, unless you're lottoing and trying to just flip an account, you should not be trading Tesla. Trade TSLL. You should not be trading Tesla unless you don't care. You're just YOLOing it. You should not be trading Tesla. You should not be trading Coinbase, in my opinion. Wouldn't it feel better if you're not stressing, but you still make 100% on your money? Am I talking crazy? All right. Does that help a little bit? Thomas, I appreciate you, man. One I'm going to watch out for is this Marvel too. This Marvel is starting to rotate back up on a weekly chart. Nice bull flag there. It's got to take out some highs, but that could go to 80 plus and start flying. All right. Cool. SoFi is at 52-week high now. Yeah, I think a pullback can happen at SoFi at 30. All right. MSRN. Whoops. Let me see. It's not pulling up on Webull, at least. MSRN. I think the futures are pulling back too. What is MSRN? Maybe I'm just crazy. Dreamer? Or did you type it in wrong? Or is that something that's on a different exchange? I don't see it on Robinhood, or maybe I'm not reading that right. Okay. Let's check the futures really quick because we're getting some pullback here on ES. NQ. Another secret sauce is also SMH. Okay. SMH. It is the ETF for the semiconductors. So if I see the SMH a little bit overextended with a gap fill, that potentially means that I could have a pullback on the semiconductor sector. So if you're looking to wake up on Monday morning and trade calls on NVIDIA, trade calls on AMD, trade calls on, all these other semiconductors, AVGO, like this, if it gets stuck here and wants to pull back, right, into that gap, all right, I'm gonna be a little hesitant about going long for calls on the semiconductor sector. So that's what I, kind of reserved a little bit on this AMD is I don't like that AMD is sitting here unless it breaks out against the SMH. All right, I need the SMH to show me something, or NVIDIA is going to pull us back down into this gap, back to 173, back to 170. Cool. I need some water. All right, everybody. Thank you all so much. Any final thoughts, questions, perspectives? Give me a 5 in the chat if you enjoyed it. If you have any feedback, please let me know. Like, this dude doesn't know what he's talking about, whatever. We'd love to see you inside the Discord. Something cool is all my live trading is recorded now. So if anyone needs to review live trading in WAP, you're more than welcome to review our live trading sessions as well. That's pretty cool. All right. Thanks, David. Appreciate you, brother. Appreciate you, man. Trent, awesome. Appreciate you, man. Marlon, awesome. Everybody else, thank y'all so much. If you have questions, please let me know. Shoot me a DM. I do check my DMs. My social is right there on the screen. Chris, thank you so much. I've been seeing you more frequently, Chris. I'd love to know more about you. If you're a long-term investor, if you've invested for a while, if you're learning how to trade, or if you are experienced, I'd love to know more about you, Chris. I appreciate it. All right. Thank you all so much. Y'all enjoy the rest of your Sunday evening. I will see you this week. For my Leverage University members, I will be absent. What is that? Wednesday? I'm traveling back home for the first time in like 8 years. Birmingham, Alabama. Traveling back home to Birmingham, Alabama for the first time in like 8 years. So I'm trying to heal this little thing I got going on. And I'm going to be there from Thursday to like Monday. Thursday to Monday. Serve. MRSN? Okay. I'll check one last time for you, Dreamer. MRSN? MRSN. Mersana Technologies. Okay. This is a good one, Dreamer. This is a good one because it's in the biotech sector. Anytime I see a therapeutics company, for anyone that wants to know, the doctorate is real. It's in pharmacy, past pharmacist. So this biotech sector is always speculative, right? They're always trying to cure cancer. They're trying to come up with some new technology. I haven't done my due diligence or research on this, but if I read this clinical stage biotech company, you can maybe get a double up on this. All right, 7 to, and if it goes crazy, then it goes crazy. Right, but I do like it down here showing a little bit of oversold levels, Dreamer, maybe from 7 to 14. Try to take it from there, hold runners. There are some gaps up above, back to 30. So if I do a Fibonacci from the recent highs to the lows there, that's right in that kind of golden pocket area. So your target would be $20 first. All right, $20 would be the big target for either a leap or shares, with a stop loss below 5. That help? Cool. Serve, Deshaun. Serve. Serve Robotics. Structurally, this looks good. I like the bullish momentum coming off of here. It's pretty much consolidating right there. So I'll give you a target of where it's headed. We got a support at $10.58. Okay. That monthly candle that held and came up off of there, right? Your target right now is around $18. Breaks above 18. You've got 20, 30 in sight. right? There's really nothing but room if this starts happening like this, right? And that's probably what you're looking for. So these smaller robotic biotech companies, just think of it as a double up and a triple up. So if I can get double on my money, if I put, I don't know, $5,000 in and I get 2,500, that's 50% of my money. So I take it from $14 to, what is that? Just shy, right around $20, right? I made $2,500 just on shares, right? If it goes crazy, then I'll just leave runners, right? Trim a little bit off the top, leave the house money, right? So I would say dollar cost average. This is a nice bull flag. Oh, and it also has a gap fill. That's actually really nice. So still forming bull flags. There's a bull flag right there. Broke out of there, and it's trying to go. It'll be at 20 before you know it. So if you're already in, great. Keep your support right around 10 to 11 bucks. 12 bucks is also a good buy zone, but just think about where it's going. It's filling that gap, trying to go to $20. Lyft is looking roughly about the same, right? Obviously, it's a more established company, but this is how it would look, Deshaun. See how it consolidates here for a while? You get that big bull flag breakout. Once it breaks out above that 20, there's nothing but room. This is a low volume area. It's going to straight down, straight back up. Move that over there. So your target on Lyft, if you've heard people talking about Lyft, is minimally $30. Minimally. It could do an Uber move. We've called a lot of these bottoms before. It could do an Uber move all the way back up to 70 plus if they do something stupid. So Lyft, still, in my opinion, it is now profitable. It's a profitable company. And also it's at discounted lows. Good. This Lyft will make a move within the next, in my opinion, with this monthly candle, within the next, it'll probably be at 40 within the next 6 months or sooner. But it is a slower mover, so it could pull back before it goes back up. But $20, great entry, in my opinion. All right. Get 100 calls in serve. Nice. What's your expiration date? So you got 100 call options in serve. What's the expiration date, Deshaun, if you don't mind me asking? I was just trying to see where, jeez, excuse me. But your entry is good. If you got an average cost or you entered anywhere between 10 or underneath 10, I think you're sitting pretty. $116,2026, you mean? 2026. 116,2026. Okay, perfect. Is your strike price 100? It don't even go up that far. What's your strike price? Like you have 120 calls. And you don't have to share if you don't want to. It's like, hey, that's too much information. You're more than welcome to chill. But I think it's a really good, I think it's a good learning lesson of where to be convicted and then also where it's headed. So if serve is going to $20, like we said, look how much volume is on those 20 calls, right? Decent amount, very little put interest there into January, filling that gap back up to 20. Yeah, that looks good. Awesome. Awesome job, man. Yep, 26. Nice. 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 So I'll just say this as well, because, man, y'all get me on this teaching kick. You're like, yeah, keep sharing. If Deshaun has 26 calls and he has roughly 100 of them, and he probably got them way lower than $125, he's up 100+%. That means that Deshaun got those roughly about 30, 40, 50 bucks per contract, right? So that makes sense, right? That's not a lot. Don't think about the amount of contracts. What's the position size, right? The position size is 3 grand, something like that, right? Which is good, right? That's still very low risk, in my opinion, for a very high reward move. So I tell people all the time, when they ask me, well, how many contracts do you do? It's not about the amount of contracts. It's the position size. I could have 3 contracts, but have $2,000 in the position. Or I could have 100 contracts and have $2,000 in the position, right? It's not about the amount of contracts. So if you see anyone flexing, oh man, this person did 50 contracts, 100 contracts. What's their position size, right? All right, chart 26 calls. So Deshaun would want to ideally, when he gets that 20 push, because you always want to have a plan of your exit, right? So just say Deshaun gets that 20 push within the next month. And that's where people in general, and maybe he's advanced, right? Maybe he's like, Brian, I know what I'm doing. I already got my exit strategy. He wants to be aware of this $23 to $24 level to potentially trim some off, right? You do not want to hold it all the way in, but he can hold runners. So maybe he trims 50% when it gets to $23, $24, $25. Now, if he has a higher risk tolerance, he's like, I'm holding for broke. I'm holding all 100 contracts just in case that happens. That's fine, right? We got about 3 months left. So if he gets that move into 23 or 24, there's a resistance, right? See that? 23 knocked all the way back down to 8. 24 knocked back down to 14. Until it does so, we cannot say this is going to just break through until it does so. So he wants to be mindful that when it gets around $20 to $21, he may want to trim some contracts off. Does that make sense for everybody? You could be up, but most don't know when do I exit? When do I take this? Do I hold away to the expiration or what? Right? The chart will tell you. I want to take a trim when it gets into $20 to $23. Hold runners. Oh, okay. Average cost 230, strike 12, 15. Okay, perfect. Perfect. That answer is even better. That's even better. He did more in the money. I thought you did 26 calls, 26 strike. So I appreciate you, Deshaun. Awesome, man. I love that. So when he was doing a bigger swing, he did significantly in the money, depending on when he added. So it's looking good. Awesome job. Great. Great. Swing trading is awesome. It's not as sexy as day trading, but it's awesome because you don't have to stress because you have time. So you might be celebrating later, which is why I like swing trading, right? Deshaun's just waiting to the end of the year. It's like, hey, I'm up. I'm just going to cruise with this, right? But some people do like day trading because they need to understand the movement of the stock, right? They want to understand how I can make $100 a day, but also you can make $1,000 within the next month with a big swing trade, right? So there you go. Cool. All right. Go watch that leap and swing trade video if you have not. I think that'd be great. And if you want to join the Discord, we'll be inside. I'll see y'all on the live next Sunday for Stock Sermon Sunday again. Peace, love, and blessings. Yep. Do both. I love it.